What if I told you that war doesn't just destroy nations? It quietly reshapes wealth? What if, while millions panic, a small group of people are positioning themselves to win? Right now, the world is facing rising tensions, economic uncertainty, and unpredictable markets. Stocks fluctuate, inflation rises, fear spreads, and in the middle of all this chaos, something unusual is happening. Bitcoin is moving, not randomly, not silently, but in a way that has captured the attention of investors, traders, and even governments. But here's the real question everyone is asking. Is Bitcoin a safe haven during times of war? Or is it just another risky illusion? To understand this, we need to look at one simple truth. In times of crisis, money never disappears. It moves. When traditional markets become unstable, investors begin searching for alternatives. Gold has always been the classic safe haven. But today, a new player has entered the game. Bitcoin. Some call it digital gold. Others call it the future of money. But during global uncertainty, its behavior becomes unpredictable. Sometimes, Bitcoin rises when fear increases. Other times, it falls alongside stocks, acting like any other high-risk asset. So what is it, really? A protection? Or a gamble? Let's take a step back. War impacts economies in powerful ways. Supply chains break. Energy prices rise. Governments print more money. And when more money enters the system, the value of that money decreases. This is where Bitcoin enters the conversation. Unlike traditional currencies, Bitcoin has a limited supply. Only 21 million will ever exist. No central bank can print more of it. No government can fully control it. And that idea is what attracts people during uncertain times. But here's what most people don't realize. Bitcoin doesn't move based only on logic. It moves based on emotion, fear, greed, speculation. And during war, emotions are at their highest. This is why Bitcoin can rise sharply and crash just as fast. So while some investors see it as protection, others see it as one of the most volatile assets ever created. And that brings us back to the main question. Is Bitcoin truly safe during war? Or is it simply reacting to the same fear that drives the rest of the market? Because if it's driven by fear, then it's not a safe haven. It's a reflection of chaos. And maybe that's the truth no one wants to admit. But this is only the beginning. In the next part, we will break down the reality behind Bitcoin's safe haven narrative and whether it actually protects your money or puts it at even greater risk. Stay with me. Everyone is talking about Bitcoin. Some call it the future of money. Others call it digital gold. But in times of crisis, labels don't matter. Only one question matters. Does Bitcoin actually protect your money? Let's be clear. A true safe haven is something that holds its value, or even increases, when everything else is falling apart. Gold has done this for decades. It has survived wars, financial crashes, and economic collapse. But Bitcoin, its story is very different. At first glance, it seems perfect. It has a limited supply. It is decentralized. No government can print more of it. These are powerful qualities, especially during times of uncertainty. This is why many investors rushed into Bitcoin during global crises, believing it would act as a shield against inflation and instability. And sometimes, it does. There have been moments when Bitcoin rises during fear, when markets panic and people look for alternatives. Bitcoin attracts attention and money. But here's the uncomfortable truth. Bitcoin doesn't always behave like a safe haven. In fact, sometimes it does the exact opposite. There have been periods where global markets crashed, and Bitcoin crashed even harder. Why? Because Bitcoin is still a risk asset. It is highly driven by speculation. Large investors, known as whales, can influence the market, and retail traders often react emotionally. Fear leads to selling. Greed leads to buying. And this creates extreme volatility. Unlike gold, Bitcoin does not have centuries of trust behind it. It is still evolving, still being tested. And during uncertain times, that matters. Now, let's talk about something important. Correlation. If Bitcoin were truly a safe haven, It would move independently from traditional markets. But in many cases, it doesn't. It often moves in the same direction as tech stocks. When stocks rise, Bitcoin rises. When stocks fall, Bitcoin falls. This raises a serious question. If Bitcoin behaves like a risk asset, can it really protect you in a crisis? Or is it just another investment with higher volatility? This is where the illusion begins. Many people invest in Bitcoin believing it is safe. But safety in markets is not about belief. It is about behavior. And Bitcoin's behavior has been inconsistent. Sometimes it protects. Sometimes it amplifies losses. So what does that mean for you? It means Bitcoin is not a guaranteed safe haven. It is an opportunity, but also a risk. And understanding that difference is what separates smart investors from emotional ones. Because in uncertain times, the biggest danger is not the market. It's misunderstanding what you're investing in. In the next part, we will compare Bitcoin directly to stocks. Which one is smarter? Which one is safer? And where should you really put your money? Stay focused. At some point, every investor faces the same question. Where should I put my money? In something stable, or something that could change everything? This is where the real comparison begins. Bitcoin versus stocks. Two completely different worlds. Two completely different philosophies. When you buy a stock, you are buying a piece of a company, a real business, with products, employees, revenue, and growth. Companies generate value over time. They build, expand, and innovate. And as they grow, your investment grows with them. This is why stocks have been one of the most reliable ways to build long-term wealth. But Bitcoin is not a company. It doesn't produce anything. It doesn't generate income. Its value comes from one thing: belief. Belief that it will become more valuable in the future. Belief that more people will adopt it. Belief that it represents a new financial system. And sometimes, belief is powerful. Powerful enough to drive massive price increases. Powerful enough to create life-changing profits. But also, powerful enough to create massive losses. Because when belief shakes, the price follows. Now let's talk about risk. Stocks can be volatile, but they are backed by real-world performance. Even when markets crash, strong companies often recover over time. They adapt. They evolve. Bitcoin, on the other hand, moves faster and falls faster. A single piece of news, a regulation, or even a tweet can move the entire market. And this is what makes it both exciting and dangerous. So which one is better? There is no simple answer. If you are looking for stability, long-term growth, and a more predictable path, stocks may be the safer choice. But if you are willing to take higher risks, if you can handle volatility, and if you believe in the future of digital assets, Bitcoin becomes an option, not a guarantee, an option. And this is where most people make a mistake. They treat Bitcoin like a shortcut, a fast way to get rich. But in reality, it is one of the most psychologically demanding assets in the world. It tests your patience, your emotions, your discipline. Because the biggest challenge is not the market, it's you. Can you hold when everything is falling? Can you stay calm when everyone is panicking? Or will you follow the crowd, buying at the top and selling at the bottom? This is the difference between investors and gamblers, and understanding that difference changes everything. In the final part, we will answer the most important question of all. Should you invest in Bitcoin right now, or wait? And the answer might not be what you expect. Stay ready. After everything we've explored, one question remains. Should you invest in Bitcoin right now? Not next year. Not someday. Now. The truth is, there is no perfect moment. No signal that guarantees success. No entry point that eliminates risk. Because markets don't reward certainty. They reward preparation. Most people wait for the perfect time. They wait until the news feels safe, until the price feels stable. But by then, the opportunity is often gone. And others do the opposite. They rush in during hype. They follow trends. They invest based on emotion and pay the price later. So where does that leave you? Somewhere in between. Not driven by fear, not controlled by hype, but guided by understanding. Because Bitcoin is not just an investment. It's a decision about how you see the future. Do you believe in decentralized systems? Do you believe digital assets will play a major role in the years ahead? If the answer is yes, then Bitcoin becomes more than speculation. It becomes part of a long-term vision. But even then, there is something you must understand. Risk never disappears. It can only be managed. This is why smart investors don't go all in. They don't risk everything on one idea. They allocate a small percentage, an amount they can afford to hold, even when the market turns against them. Because it will. There will be drops. There will be fear. There will be moments that test your conviction. And in those moments, your strategy matters more than your entry. This is not about getting rich overnight. It's about staying in the game long enough to benefit from the long-term trend. So should you invest right now? Only if you understand what you're doing. Only if you accept the risk. Only if you are prepared, mentally and financially. Because Bitcoin is not a guarantee. It is a tool. And like any tool, it can build or it can destroy. The difference is how you use it. So don't follow the noise. Don't chase the market. Learn, observe, decide, and move with intention. Because in the end, the goal is not just to make money, it's to understand it. And once you do, you stop reacting to the market, and you start thinking differently. Forever.